Greetings traders and welcome back to today's video. So we're going to be doing a weekly outlook video and without wasting any time, let's get into it. So all of these pairs that I have flagged over here are the pairs that we'll be discussing in today's video. So with that being said, let's get into it. So the first pair we're going to be starting with is USD. Of course, this is the weekly time frame. Now, I always mention all the time that how price action moves is that price is always going to look to move into having to take out external range price action and then it will pull back into internal range, right? Same way over there, you took out buy stops and then after those buy stops are taken, you get a draw into this fair value gap, which is internal range price action. And then from there towards external, from external, now we are in internal. From internal, we want to see the market push into the external, right? So we spoke about EURUSD for these past 2 weeks. Last week, released a video and we spoke about how we want to find support off of this fair value gap. And if we find support, we might see the push towards the upside. We can see how we drew lower than the fair value gap and then how the market then rejected back into closing in the fair value gap. That justifies that the fair value gap is still valid. But if we see price action break this fair value gap, there is a likelihood that you might pull back into this order block, right? But if you get a break of the fair value gap, that makes the fair value gap invalid, of course, right? But since it's still valid, let's see what the lower time frames are suggesting for the week. Okay, cool. This is the H4 time frame, and what we'd like to see, because we have the weekly fair value gap, and as we look at the H4 time frame, we can see that at some point we had a bullish institutional order flow and then we got a market structure shift and then breaks of structures towards the downside. This has been the sell side of the curve, right? This is bearish institutional order flow. And for the past week, we've just been waiting for price action to give us the shift into bullish order flow, right? The moment we get that shift, that's when we get clear confirmation that this area is in fact holding. So what does a bullish institutional market structure look like, right? It's for a very long time, we see our price action reaches into the fair value gap. The next thing we want to see, because this is bearish delivery, we want to then see a break of structure towards the upside, market structure shift, that sort of a thing that will give us an indication that this support or this fair value gap is in fact going to be holding as a form of institutional support. Then we like to see a pullback into a fair value gap, order block, etc. And then we want to then look for buying opportunities continuously towards the upside until we reach the external range liquidity. So at the moment, that's what we're waiting on. That's what we're waiting for on Euro USD. So just set an alert on your nearest high. At the moment, it's this one. Oh wait, in fact, I am wrong. We did get a market structure shift. I just didn't notice that. This guy over here is in fact a market structure shift. Cool. So now the next thing you want to wait for, and the other cool thing about this having to be a market structure shift that justifies it having to be a strong market structure shift is the fact that this candle pulled back into that fair value gap and rejected it, right? Pushing price action to take out the external range liquidity at that low. If price is still holding as bearish, right, this candle shouldn't have broken through this high. And in fact, it breaks through the fair value gap, giving us an indication that there's a strong influx of buying momentum starting to step in, right? So now we got a clear indication of the potential of this holding as a clear support, right? This is just that small indication for us to then look for buying opportunities. So how you'd go about doing this is after this 4 hour candle closes, if this fair value gap is still valid and it's still, if it's there, then you'd want to see price action pull back into that fair value gap, look for buying opportunities on a lower time frame to target all of the liquidity that's resting in premium prices. At the moment, we do have this engineered trend line liquidity over here. We know that trend line traders have been selling this thing and we got another touch here. So their stop losses are resting at these highs. There's a large amount of liquidity resting there that we can look to target, right? But let's move on. Cool, this is USDJPY. This is the weekly time frame. So we can see again what has happened is we've taken out external range liquidity. From external, what we want to see is the market potentially pulling back into internal range liquidity, right? So let's see if we got that indication on the H4. Cool, so this is the H4 time frame. We can see over here we got a market structure shift, giving us an indication that we potentially looking to push towards the downside because the lows are starting to fail, right? And so how you'd go about entering this guy as well is you just want to wait for either a pullback. You do have this nice area over here holding as a breaker. Potentially, if there's a fair value gap that forms here, then you'd most likely want to see if the market pulls back into that area. And if it does, go onto your lower time frames, your M15, look for a selling opportunity to target the fair value gap over there. And so once price action reaches here on the 4 hour, this would have been the sell side of the curve. All you then want to do, because this is how price action would deliver down, right? All you then want to do if you want to look for buying opportunities, you'd want to wait for that market structure shift towards the upside, indicating the potential likelihood of this having to hold as a strong support, right? That's the idea. So you just follow price action as it delivers in that manner. That being said, let's go on to the next pair. Cool. So this is AUDJPY. This is the weekly time frame. We can see that recently we've taken out, or last week's candle took out the buy stops resting up there and closed below. That's a clear indication that you're going to get nice bearishness, right? So external range was taken. Now you want to see the market draw into internal range. Let's see the smaller time frames. Cool. So you can see on AUDJPY, there hasn't been any market structure shift towards the downside. So over here, you're not going to be doing anything. You're just going to be waiting for that indication. But it does seem like price action might just push heavily towards that fair value gap. But then that's not a problem. That doesn't mean that you don't have any trades. It just means that you then going to have to wait for a market structure shift on the H4 once price action reaches this area to then target the highs, right? And another thing that I'd like to speak about, right? You'll notice that USDJPY and AUDJPY are basically doing the same thing. They're currently in a pullback phase into a fair value gap. Of course, they're similar because of the fact that they both share the JPY, right? And this is important, and I feel like it's very important to note because you'll notice the way, although we have so many pairs that are giving us confirmations to trade in the week, that doesn't necessarily mean that you want to be trading all of them. So you'll notice that I, categorized all my pairs. You have majors, you have AUD centrics, CAD centrics. This essentially means that if I get, for instance, USDJPY gives me a confirmation and I enter it, that means that I shouldn't be trading any other pair in the USD uh, category, right? In this USD majors category. In fact, I shouldn't be trading any other pair that either has USD or JPY in it. So you don't want to be finding yourself trading the same idea because all of these pairs, most of them, in fact, trade with a 80 to 90% correlation. So if you're trading the same direction, the same type of price action, you're basically doubling your risk on a single idea. I don't know if that makes sense. I hope it does, right? So if I trade AUDJPY and I'm in, for instance, Euro USD, that means I shouldn't be trading any other AUD pair, any other JPY pair. I shouldn't be trading any other Euro or USD pair until my take profits get hit, right? So that helps us to alleviate having to overtrade, and it keeps us at a good range in terms of the amount of trades to take per week. But with that being said, let's move on to CADJPY. Okay, cool. On CADJPY, this is the weekly time frame. Again, we took out external range liquidity. We'd like to see the market pull back into internal range liquidity. So you're seeing that it's exactly the same thing that's happening on the previous pair that we're looking at, right? Let's look at the H4. Okay, cool. So we can see on CADJPY on the H4 time frame, we in fact got a market structure shift, right? That market structure shift is now giving us the indication that selling is being introduced into the market, and then we likely going to see that draw into that fair value gap with high probability, right? So what do we want to see in order to participate in this? Possibly a pullback into this fair value gap. If it does form, you also have the breaker blocks over here, right? Price action having to pull back into that would also be good for you to look for a selling opportunity, right? But yeah, with that being said, let's move on to the next pair. This is EURJPY, and for the past few weeks, we've seen this heavy volatility in price action, and I spoke about this, last week as well. Is the fact that we have taken out external range liquidity. We can see that the draw most likely is towards that high, right? The external range there. But it wouldn't hurt for us to also wait for the potential of price action having to pull back into a fair value gap, right? And so we seeing this on the weekly time frame that price action might be pulling back there. So all we want to see on our H4 is a market structure shift that is suggesting a pullback into that into that weekly fair value gap. And once we find support, we want to then continue the bullishness, right? Let's look at the H4. Cool. H4 time frame, we can see at the moment we do not have a market structure shift towards the downside, and there's potentially a likelihood that uh, price action might just push there, right? But if you find a market structure shift, a bullish market structure shift, definitely look for buying opportunities, target these relatively equal highs, continue that push towards the upside. Cool. GBPCHF, this is the weekly time frame. We see price action took out external range liquidity, the sell stops, pulled back into internal. Fair value gap got tapped into or rebalanced. Now we want to see the market draw towards external range liquidity, right? Let's go on to the H4. Cool. Now on the H4, over these past 2 weeks, we've been taking beautiful setups on GBPCHF. Uh, so we can see the way it's been delivering. I want to show you guys something about delivery. We can see that price action, of course, is in the sell side of the curve. We're taking out sell stops. We're pulling back into internal range liquidity, filled the fair value gap, hit the order block over there. In fact, we spoke about this, um, predicted the likelihood of price action having to push lower so as to take out these sell stops over here about 2 weeks ago, right? Or 3 weeks, I'm not sure. In any case, 7th of June, yeah. So we see price action push lower, takes out external range, pulls back into a redelivered, rebalanced price range, takes out external, pulls back, fills the fair value gap, order block, takes out external, internal. We see price action pushing low. We see this low over here also pulls back into a fair value gap. Now, I taught this in the mentorship, the first few videos, just looking at market structure. Once a leg pulls back into a fair value gap, that high becomes an intermediate term high. It's a strong high that should not be broken. But now we see here price action breaks it. That's a clear market structure, not a market structure shift, but a break of structure, which implies that price action is no longer in the sell side of a curve, but now it's in the buy side of the curve. That there's the likelihood of price action having to pull back into wherever it's looking to go to, right? So that means although on the weekly time frame we are completely bearish and that is our draw, on the H4 we are not bearish, we are bullish. That means we are not going to be looking for selling opportunities on GBPCHF unless we get a market structure shift again towards the downside, which will align to the sell side of the curve. Then we can look for selling opportunities. All right. I hope that makes sense. Cool. Looking at USDCHF, again, external range was taken for the past 2 weeks. We've been predicting that price action is going to look to pull back into this weekly fair value gap. We tapped into it. We rejected that middle point, which is consequent encroachment. And so from there, we would like to see a continuation lower towards the downside. Let's look at the H4. Cool. Looking at the H4, we can see at the moment we do not have a market structure shift towards the downside. Currently, I have this line on that low. If price action looks to break that low, that would be a market structure shift. Then we can look for potential selling opportunities towards the downside so as to target this liquidity pool. All right. So just keep your eye on that. Cool. Looking at NZDCHF. While we're on the 4 hour, let's just look at the weekly real quick. Cool. So Again, external range got taken, we pulled back into internal. The idea is to draw towards external, right? Let's go back to the H4. Cool. So now looking at our H4 time frame, and we did speak about this pair last week. I mentioned that although we're looking for selling opportunities, um, the weekly is bearish. We did take out this high, right? That is an intermediate term high. We broke through it, which implied that the H4 is now bullish, which we couldn't be looking to sell, right? But now we see that eventually we got a break of structure again towards the downside, right? And so now we're back in the sell side of the curve. Now we see a price action push heavy, takes out this high and breaks through it. The reason why this isn't a break of structure is because this high did not pull back into any fair value gap. So this high is just seen as a normal high, right? That price action, excuse me, that price action was just looking to sweep. And we can see that there's a clear, let me just that there's a clear resistance at this point, that this at one point was holding as resistance, and people were continuously looking for selling opportunities off of that point. So the market just pushed up there into a premium to take out all the buy stops that are resting up there, the stop losses, etc. Look to sell against those. We get a rejection block, and so the draw might just be continuing towards the downside, right? So we see our price action has now pulled back into this fair value gap, and off of that area, we can look for selling opportunities. Let's go on to the M15 and look at this opportunity. Cool. So we see how price action has pulled back into the fair value gap. How I go about entering is that I want to see at least two arrays aligning with the direction of bearishness, right? So the first array for me and price action has to be within the London session and New York session, right? That's my kill zone. So for instance, we can see that price action pulled back into this area. We got a rejection block. That's my first array. The next array we see here is that price action gave us, this was a fair value gap that was meant to hold as support, but we can see how we break through that. Immediately we break through that. Over there, that's a selling opportunity that you could look to sell, right? And you look to target whatever it is you look to target. All right, let's move on. Cool. So looking at Euro NZD, again, external range got taken. We pulled back into a fair value gap, completely filled it. Found support at this order block, and so now the draw is towards that external range liquidity over there, right? So you see the cool thing is since June the 9th, you've had a draw towards a certain point, and you just come in and look for buying opportunities on the H4. Let's look at that time frame. So looking at price action on the H4, we can see that completely was still bullish. Price hasn't broken through a low that has rebalanced a fair value gap, an intermediate term low. So all of these areas are just seen as sell stops, right? So sell stops have been taken. This is a pullback. Sell stops have been taken. We still want to see the continuation towards the upside. So we see that we found support at this rejection block. Over here, price pushed heavy towards the upside, pulls back into H4 fair value gap. Let's look at how you could look at entering this on the M15. So one way you could look to enter it, the way I go about entering, of course, you want to make sure you're in your London session from 2 a.m. to about 5, um, 5 p.m. No, that's my time. About 12 p.m. or 11 a.m. New York time, that's the kill zone, right? Basically from London open to New York close, right? In any case, we pull back into that fair value gap. This guy over here is a rejection block. I will teach all of these things when we get into the mentorship. No worries about that. That's my first array confirming bullishness. This fair value gap was supposed to hold to push price action lower. We see how it fails, right? The moment it fails, I have two arrays suggesting bullishness, so I take the entry off of that point. We can see when price action continues after this candle closes, there's a fair value gap. So you have a few arrays suggesting bullishness, right? And then in terms of your draw, right, you could look to target 2%, 3%, etc. However much you look to target, right? Um, in any case, with that being said, guys, kind regards, the architect.